Rather, what I want to do is I want to tell you about a 1000% day that I had a couple of days ago. Because I think that even though it is an extreme example of day trading, and it comes with a lot of caveats and a lot of doubts, no doubt, I think there's also some important lessons in it for those people who like to trade aggressively. And that's the reason why I have put together this presentation. Now, this presentation does come with a warning. I'm not endorsing this kind of trading. I don't do it every day. When I do it, the conditions have to be right. I don't mind taking this kind of risk on my own account, but I would never do it on the Telegram channel that I run. I run 2 Telegram channels where I post my trades free of charge live in real time. But I would never engage in this kind of risk approach because I think most people wouldn't like it. So the first trade that you're about to see, which wasn't filmed, I provided the documentation for it, but it wasn't filmed. I would have lost 45% of my account if I was stopped out. Now, right there, you should stop and pause, because most textbooks, most trading guides will advise you not to risk more than 1% of your account. And when you're risking 1%, obviously you're not going to make 1000% on an account if you're risking 1%. But the reason why I take much bigger risk than is endorsed by guidebooks and money management advice is that if I have $100,000 on an account and I want to risk 1% of that, well, it stands to reason that I'm risking $1,000. But my purview right from the beginning of trading has always been, why do I want to have $99,000 on my account that I don't use? I know that there's some initial margin. I know that there's some variation margin in order to keep a position open. But why would I have so much money on my account if I'm never going to use it? I would rather have 100,000, stick 90,000 into a bank account, and then go all out with the $10,000. That's my remit on trading. That's how I like to do it. But the reason for this warning page is that this is probably not for everybody. Now, the first trade went well, which served as a catalyst to take on even more risk. I have provided some documentation for the funding. I put 250,000 Danish kroners, which is about 40,000 US dollars. And I do that at 7 o'clock in the morning. And by 9 o'clock that night, some 14 hours later, the account is now at 2.8 million Danish kroners, which is about $465,000. Now, all of this I will, of course, provide documentation for. But again, I stipulate here, this is not because I want to show off and show you, oh, what a great trader I am. Because although I'm a decent trader, if I really had to give a balanced representation, I would have to also show you all the times that I put 250,000 Danish kroners in and I've blown them all within an hour or two of trading. So see the video of here not as my attempt to show off, but see it as an attempt to show you what trading can be like if you decide to be aggressive. And you don't even need to risk as much as I have. What this video could also give you some enlightenment to is to how to add to winning trades. So the content here is that this is an extreme example of adding to winning trades. Most of it happened to be caught on camera because I like to record my trades so I can go back and view them for later educational guidance for me. I feel that this video is educational, but it does have an extreme risk profile. Not only that, you need a fair degree of margin. I'm trading with TD365.com, and here I'll have 200 to 1. Also, the right day has to be present. You need a trend day, and trend day is usually on stock indices only one in every 5 days. But not only that, you need the right mindset, because it's not like you're going to receive an email in the morning before the trading day starts and saying, "Hello, Tom, today is a trend day." You know, trend days have a sneaky way of crawling up on you, and they tend to be the result of gap ups that then gets filled, or gaps down that gets filled. that's when you get the best trend days. I have identified them as part of my research, but this video is not about how to identify trend days. This is about what you do when you think that a trend day is at hand. So here is my credit wire. 250,000 goes into my account. This happens in the morning. And here's a little bit of instructional content. I do a lot of pattern recognition, but pattern recognition in a manner that you have perhaps not been subjected to before. So what you're seeing here is Thursday's trading day in the DAX, and then you see Friday's trading day in the DAX, and you actually have a very nice trend move higher. It isn't a trend day because of this reversal back down again. I mean, we pretty much close unchanged for the day. When Friday's price action is not able to supersede the high of the previous day's price action, i.e. when the high of Friday is unable to get above the high of Thursday during regular trading hours, the odds are overwhelmingly high that we are going to get a lower move on the Monday, which is when this when this trade transpired. However, when the market gaps up on a Monday, when you were expecting a lower move because of the Thursday-Friday pattern, you often get what's called a trend day. So the market, as you can see, is trading around 14,000. And I felt that 14,000 was probably also going to act as a psychological barrier. Barrier in the context of support for the market. So I started buying here at 8:15. This is UK time. I started buying the DAX at 14,007, and I, within a relatively short space of time, I bought a pretty decent base position. The market did dip just below 14,000 at 8:37, and I bought a little bit more there and here. But otherwise, what you should see is that I pretty much add to winning trades throughout. I don't add to losing trades, but I needed to establish what I called a base position. Now, as I pointed out earlier, my stop loss, had I been stopped out, would have lost me half of my account, 45% to be exact. But I didn't get stopped out, which was fortunate. I had put a stop loss down around 13,000. I think it was about 950, 60 or thereabouts. So I didn't get stopped out. I'm not saying that it was close, but it wasn't far off either. And as the morning progresses and the DAX is rallying, I will buy more and more. So by midday, I'm long 3,750 Danish kroners per point, which is about $600 odd per point movement. Now, next page will show you what that looks like on the chart, because this is where I'm beginning to buy. Of course, I didn't know that this was going to happen. I just made a bet that 14,000 was going to hold. I used some price action. You see this bar here. This is a significant bar because it's a bar that makes a fresh low, but it closes in green and it has virtually no tail. And I use that as a guide that if the market begins to trade above this high, then price action will dictate that we are going to get higher prices for the following 2-3 bars. See, that's the thing about technical analysis. Most people don't realize that the technical analysis is really only has forecasting value for the first 2 or 3 next bars after you get the signal. But that's perhaps an academic discussion for another time. I'm buying 2,000 here and another 1,000 here. This is Danish kroners. And at this point, I'm feeling pretty good because this bar takes out the prior tops high. And I'm buying another 500 here on a slight retracement. And then I'm adding to it as we're breaking above this high. So all in all, I'm feeling pretty good here because the market is zooming higher. And I'm up about 150 or 105, 110 points. Now, Trend days happen in about 20% of all trading days, and they're not easy to catch. I've spent years working on methods to identify them, and as I said, this video is not about me describing how I identify trend days. That has to come at another point. But one of the key components for a trend day is that the market is gapping higher and surprising many people, i.e. catching people on the wrong foot. So when you think about it, the essence of a trend day, there's very little overlap between the bars. Yeah, you see a lot of overlap here in the beginning, but then you pretty much see the market just keeps making higher lows and higher highs with the occasional 20-minute retracement and then higher highs all the way. Every single bar's high and low is higher and lower than the previous one. That's a good sign for a trend day. So the paradox of a trend day is that everyone basically agrees. Everyone thinks this market is headed in that direction. Hence, there's no overlap. So, was this a good trade? Yeah, it was pretty good. Was it perfect? Hell no. And there's definitely room for improvement. And why am I saying that? Well, that becomes evident right now. This is me taking my profit here about 1 o'clock in the afternoon. And you can add this up to yourself, but it adds up to quite a lot of Danish kroners. What I think is interesting is this. I decide to take my profit right here and wait for the US Open because I'm thinking the US market is probably where the next opportunity is going to be. And the problem here is I'm beginning to think, because when you're looking at this chart here, there really isn't much to argue for taking profits. And I miss this entire move. In fact, I made 110 points, but I left 250 points on the table. Nevertheless, I did well, and later on that afternoon, Nasdaq became my focus of interest. I started shorting the Nasdaq, establishing a base position at 10 minutes to 4 UK time. I did that around 12,654. Let me show you what it looks like on the chart. I short the Nasdaq down here, and I do it because this to me seems like a double top. This is a 10-minute chart, and I'm basically selling a double top. My stop loss at this point would be above here. As the market slides lower, I see one green candle. And that green candle is important to me because I use that as an inflection point, like a pivot, like a pivot point essentially, but not pivot point in the context of, open, high, low, close divided by 4. Not those kind of pivot points, but the pivot point says is, at this point here, this still looks like an uptrend, and we have nothing but higher lows and higher highs. But if this green candle's low was to be broken, I would have imagined that this market, technically speaking, should be headed to the old lows. So I'm placing orders in below the low of this green candle, essentially betting the open profit that I have from the earlier position. So as you can see here from my trade records, I am placing quite a lot of short orders as this market falls. But again, what you should also notice is I'm not adding to a losing position. I'm purely adding to a winning position. So this is what it looks like up close with the entry points, price, and time. Now at this point here, I'm actually getting a little nervous because my position is big and the market has made a 90-point rebound. So I'm hoping for some kind of weakness. It was actually a mentor of mine, Bryce Gilmore. I sat and traded with him on many a nights, trading S&P 500 futures. And one time he said to me that he liked to actually wait. If he wanted to short, he liked to wait for one red bar on a shorter time frame. So if he was trading off a 5-minute chart, he would then zoom in on a 1-minute chart and wait for one red bar. If he had the the sell signal on a 5-minute bar, he would wait for a red bar on a 1-minute time frame before he actually initiated his sell short. At this point here, I'm actually just selling short the moment I see this bar materialize. But what you don't realize is that this bar closes at its low. But 10 minutes is a long time when you sit and wait for a market bar to close. And during this, it could have come down here, it could have gone back up again. But the fact that it closed right at its lows told me that this bar here is longer than the prior bar and longer than the bar before. It closes below the respective lows of the two prior bars. And to me, this feels like a continuation bar of the trend that has already been set in motion. That's why I'm beginning to add even more aggressively to the short position. So now I got the base position I established. I got the first add-ons, and now I'm adding even more. We started shorting at 12,653. We're now down at 12,530. So we're basically just keep squeezing the short side, keep squeezing, keep pressing, being aggressive. Down here now the market is 12,422, and obviously my account has swollen. But I didn't want to make the mistake that I made in the DAX where I got out way too early. So I am gunning for the old lows to be taken out. That's what I'm betting on here. Now I want to give you some time, some pause for reflection. Can we agree on a couple of things here? Can we agree on that what I'm doing here is not something you wouldn't be able to do either? It may not be that you can do it in this size right now, because this is a question of the emotional pressure. But if you were trading, say, $1 a point, and you could do this at $1 a point, don't you think you'd be able to do it at $1.05 the next time? And don't you think then you could squeeze it up to $1.10 the next time? And before you know it, you could do it in $2 a point. And if you can do it at $2 a point, you've already doubled your trading size. Now imagine that you have 5 years to keep progressing, getting better and better and better. Don't you think eventually you could get up to a decent trading size? And are you going to experience days where you're pressing the trend only to see the market do a V reversal? Of course you are. One of the reasons why I'm not this aggressive in my Telegram channels is because of the amount of V reversals we've seen, for example, in the Nasdaq index over the last 6 months. And the amount of times I had built up a significant profit only to lose it all because I've added too aggressively, and then the market all of a sudden changed direction. But in this case, it's not. And hence I keep adding to my short position, because we're not down at the old lows yet. And eventually the market reaches the old lows and I begin to take profit. And it's a big profit. And that's how you make 1,000% on an account in a day. I hope that this actually made sense from you, not from anything else, but from a pragmatic point of view. I don't want you to sit there and think, wow, that was amazing. What I want you to do is just think, I think I could do this. I may not be able to do it in 500 a point at the moment, but if I could do this at a 1 a point or 2 a point, imagine where I could be in a year's time. Imagine where I could be if I began to add to my winning trades. Not losing trades. Losers are the ones that are adding to losing trades. But winning traders are the ones that add to their winning positions. Now, expect to be uncomfortable. And this is something that I talk a lot about when I discuss the psychology behind trading, is that you gotta expect to be uncomfortable. And if you want to read a good book about this, then you should read the book by Charlie D, Legendary Bond Trader. It's written, it's published by Wiley, and it's written by William Fallon. Actually, I got about 25 copies, so if you want to get one off me, just send me an email. I'm sure we can sort something out. But it's a really good book, because here's Charlie D, who says, good traders are the ones who know that good trading will make you uncomfortable. Most of us will seek comfort, be it in life, in vocation, in trading. But actually, if you are used to being uncomfortable, you'll be used to running positions, and you'll be used to seeing your paper profits swell up and then disappear again, swell up again. Because if you look at this trend down here, it's not like it goes from here to here in one straight line. This move here is a good 100 points. This move here is 70 points. So that's 70 points times, I think at that point I was short 6,000 Danish kroners. Well, that means that 300,000 Danish kroners just disappear out of my account again on paper profit. That takes a little bit of getting used to. It means that you are uncomfortable. And this is what it'll all look like when all was said and done. There's the entries, there's the exits, time of entries, time of exit. I run 2 free Telegram channels. One is a live day trading channel where I trade predominantly stock indices. And then I run a swing trading channel, which mostly is FX trades. The day trading channel is perfect for those who can follow the market fairly closely during the trading day. And I send entries, exits. For example, this morning, I bought the DAX and the Dow. And I think we made 40 points in the DAX and we made 10 points in the Dow. The Dow was a really pathetic trade because I got out after 10 points, and had I held it for another hour, then I would have made 110 points. So don't expect perfection from me either. I'm here all day, every day, most days, but I am every bit as human as everyone else is. The swing trading channel is a good place for those who just want to have 1 or 2 trading signals a day sent to their phone. Obviously, both of them are free of charge. I make my money from trading, but I like to actually educate people because I think there's so many charlatans out there in the world who just sell people shit, absolute garbage. And I want to have an opportunity to make my little mark on the world. My legacy is going to be, here's some really good education. If you want to be a member of those channels, then send me a message via Telegram to @TomHugard for access. And if you have any questions for me, then you can direct them to hello@tradertom.com. Thank you so much for listening. I'm not going to attempt to show you how to trade. I'm going to attempt to show you how to think while you're trading. And this will become very clear in a second. By way of introduction, my name is Tom Hugard, and I come from a very unique vantage point in relation to you. You see, I started working in the city about 20 years ago. And for the first decade of my career, I sat and I watched you trade. I must have watched 100 million trades go over the tape in the 10 years that I sat on a trading floor, whilst I was managing and hedging positions, depending on which direction you saw the market go up or down. And it does provide you with a rather unique insight to watch 50,000 people trade over a decade. You get a feel for how it is people are thinking when they're sat in front of their monitors at home or wherever they are in the world. And you notice that people tend to make the same mistakes over and over and over. And actually, very few people are capable of making money consistently. So as I left in February 2009 in the throes of the bear market, I realized that actually trading had absolutely nothing to do with technical analysis, fundamental analysis. And it was difficult to begin with, because no longer did you have a security blanket in the form of a monthly paycheck. Instead, you were there, mano a mano, in front of the screen. The market was your best friend or your worst enemy, depending on the day. And here I am, some 10 years later. This year has been a good year. I made more than £1 million this year. Last year, I managed to lose nearly 90,000 on Christmas Day. Would you believe that? It's one of the reasons why I am so grateful that CMC market is stopping me from trading on a thin trading day. And it's a bit of a challenge, would you believe it, to be at a Christmas lunch and dinner. This is, I think you call this Boxing Day. Yes, you see, we Europeans, we heathens, we celebrate Christmas on the 24th while you wait a day or so, and then you have your Boxing Day, and there I was on Boxing Day in a celebratory moment, whilst at the meantime I don't know if you recall what Dow Jones did on the Boxing Day last year. It had its single biggest gain ever. It had fallen 500 points on Christmas Eve, the move that I had captured absolutely every single tick off. And on Boxing Day, I had been long, but as the Dow had risen 500-600 points, I thought, it's probably about time to begin to short this. I took my profit and I reverted short. And the Dow rallied another 600 points to make it an 1,100 point move day. And me walking out of there going, that was an expensive Christmas dinner. Fear is what's stopping people from making money in the markets. Sure, people are good at making money at times, but the tendency is to make it, lose it. Make it, lose it. I believe that the only reason why I am good at what I do is because of my relationship with fear. I am what's called a high-stake trader. Some would call it an extremely high-stake trader at institutional size. The average bet amongst CFD traders here in the United Kingdom is £7 a point. My position here equates to £750 a point in the DAX. It means that if DAX goes 20, 30 points against me, I am faced with a loss which would equate to the average annual salary of a worker here in the UK. Thus, you need to have a rather special relationship with losing, and you need to have a rather special relationship with winning as well. And what I hope to do over the next 2 hours is to change the way that you look at trading. Now, I could have come in here and I could have thrown all sorts of techniques at you. Bollinger Bands, Keltner channels, moving averages, crossovers, stochastics, MACD, RSI. Oh God, I've spent countless hours studying it, as I'm sure you have as well. But I am sure that you also realize that actually, no matter how good a grasp you get on technical analysis, there are still those days where you simply refuse to take your loss, where despite your best intentions, you simply cannot get yourself to do the right thing. So, you may quite rightly ask, do I get scared when I trade and I trade the size that I do? Of course I get scared, but the narrative here is not that I am a fearless trader. I'm not even a fearless person. I'm scared of losing loved ones. I'm scared of sending my children out in the traffic. I am in no shape or form any different than any other caring parent is. If you put me out of the balcony over here and I stare over into the ground, do I get a flutter of nerves? Sure. But with practice comes experience. Now, I'm actually a firm believer that practice does not make perfect. And I would like to elaborate on that point a little bit later on in the presentation. I'm also scared of making a complete twit of myself today. I'm scared that you don't get the message. I'm scared that you think this is ridiculous. I came to hear about how he navigates the stock indices, and I promise you, I'll give you my rather unique insight into how I trade stock indices. So if you are that way inclined where you prefer to just stick to the technical analysis, I assure you, you're not going to walk out of here empty-handed either. But the truth is that my relationship with fear has come to the point where I have desensitized, no, that's not right, I tried so hard. Sometimes foreigners can struggle a little with these words. I have desensitized myself to certain levels of stimulus that you face when, for example, a car comes at you full speed. I'm sure that if it was somehow possible to produce a brain scan while I was trading during particularly stressful situations, such as Boxing Day last year, you will find that my amygdala doesn't light up like a Christmas tree. You will probably not even be able to discern that I'm losing £90,000 because I have blocked it out. I can't block out fear in many other aspects of my life. If you put me in front of the television screen, I watch Friday the 13th, or I don't really watch much TV, so I don't know what's scary these days, but Freddy Krueger kind of style. I'm sure I'm going to sit with a pillow like everyone else does. Well, probably you won't sit with a pillow, but I will, because I don't take the horror movies very well. But when I'm faced with horror situations while I'm trading, I seem to have developed an immunity to fear, which enables me to make the right decisions when they need to be made. Whether that's because I've trained or whether I was born with it, I don't know. But the fact of the matter is that my father was a vacuum cleaner repairman and mother was a nurse. So I don't think that I've come from a heritage of risk takers. So my argument is that if I can do this with a rather unique way of doing it, then I believe you can as well. But it boils down to that practice does not make perfect. Practice makes permanent. And if you carry on practicing the wrong way, you will merely establish a behavior pattern that doesn't serve you. So, what can I accomplish in 2 hours? Well, look, not that I in any shape or form will put myself in the league of these four gentlemen, but it only took Steve Jobs 15 minutes to galvanize a departing class from Stanford University in 2015 to go out and connect the dots and not so much work from the point of view of the head, but work with the heart. And Martin Luther King, it took him 17 minutes to create the fortitude for a generation and a segment of the American public that was suppressed. It paved the way for him winning the Nobel Prize. And I don't think I need to introduce neither JFK nor Winston Churchill, at least not when I'm in the United Kingdom. Since the establishment of the rules by ESMA last year, or was it the year? No, it was last year, in August, September time last year, where all European Union brokers now had to curtail the amount of leverage that they gave to their clients. We used to enjoy 200 to 1, now we only have 20 to 1. And another thing that then established was that every single broker had to put up on their website how many of their clients were losing clients. That was a little bit like the cigarette companies being forced to put warnings on their cigarette packages and show draconian photographs of people in hospital beds with emphysema and lung cancer and anything in between. Yet it didn't stop people from smoking, and it certainly hasn't stopped the interest for trading either. But the fact some practical information first. This is being filmed. The reason it's being filmed is